So the Wycoff method is used by investors and traders to try and determine what the markets are going to do next. You can Google this and you can see how there's a Wycoff distribution and accumulation phase. And what this is there's a guy called Wycoff years ago, I forgot what his full name is, but he studied what the big players were doing to trick everybody and the psychology behind it all, and he started mapping out what they were doing. And what they did is these massive institutions, massive players on Wall Street, they would all work together into tricking everybody. And the psychology behind how the market moves, it's very counterintuitive. So what they would do is they would set it up in a way to make everyone, to test everybody's patience, to get everybody where they would run out of patience and the market would bounce around for so long that in the end everybody would buy back in. But what actually happened is what they're doing, the big players, is trying to hold the price up for as long as possible so they can sell as much as possible. So it's a distribution phase. They're distributing as much stock as possible whilst at the same time keeping everybody interested in the idea it might just go up, and the longer they keep it up, the more they start to believe it is going to go up, the more stock they can sell at a high price. And as they're selling as much as they can, as high as they can, the average pleb investor is saying it's going to keep going, get in now, and they're buying as much as they can, and they are the exit liquidity for the big players. And then once they've done selling, it crashes. So this guy was able to map out and show on average how it would happen. So right now, I really think we're in a distribution phase where they're just trying to sell as many tokens as possible. And then normally what you get is that sell-off in April, the initial sell-off, a bounce. We bounce a few times. Everybody thinks, okay, we're done. Time to send. Time to go back into a bull. And then bang, at that moment where they get as many people believing as possible, which is the whole idea. That's why I'm saying understand the psychology of the markets. It's absolutely crucial if you want to make money. What you really have to understand is that the majority get it wrong the majority of the time, and the big players are trying to do the opposite. They're trying to counter what everyone else is doing because that's where the money is. So that's why I'm saying you've got to understand the psychology of what everyone's thinking. And the distribution phase and accumulation phase, once they've done unloading the tokens and stock as high as possible, then they will crash the price purposely, and then everyone will panic. They will sell after the big players have already sold, drive the price back down, then the big players will buy back into that panic. That's why it's really important to buy the fear and sell the cheer, because understanding the basic psychology of how the markets work is the money. The average Joe isn't going to understand, and they're going to get trapped. That's why I'm saying you've got to look at what everyone else is doing. You've got to see where the sheep are, identify where the sheep are. There's a lot of people out there on Twitter who are great to counter trade. Whatever they're saying and doing, they're normally wrong. So you can look at what they're doing. You can have a list of people you can counter trade and they're normally wrong. They got a massive following because everybody else is thinking what they're thinking. So they're gratifying and verifying everyone else's opinion. That's why they got a massive following. So you can find those big players. Normally these massive Twitter accounts are great for counter trading. As I said, even though they're wrong, so's everyone else, but they're a magnet for the sheep. So identifying some of these massive accounts and just watching what they're doing, you've got to do that to understand what the sheep are doing. These massive accounts are great for counter trading. So right now I think we're in a distribution phase, and I really think that if you look at every single year, May, sell-off always continues. The only year where there hasn't been a sell-off in May was 2019 and it came in June, but it still comes under the thesis, sell in May and go away. And 2020, it came end of March, April. It came a little bit early due to COVID. The market shit the pants, and then that still came under the same thesis of sell in May, go away. It was still under the same idea, the same principle, the same philosophy. So, but this year it's playing out like clockwork, and as I say, I've made videos months ago talking about how the sell-off comes mid to end of April. It came 20th of April, and now it's perfect. It's running like clockwork. But you look at the average Joe, the average investor, and they're all calling for a new bull run. We're about to bounce, full send the cunt. It's like, and that's what I'm saying. You've got to see this clearly. So anyway, yeah, there's a guy, I posted on the Gem Hunters Twitter how every single year there's a sell-off. I pointed out every single year, bar 2019, 2020, but it still came under the same thesis. And somebody said, back test it 10 years, do your own research. The cunt never even researched this himself, but he's telling me to do my own research and back test it. So I have. I've gone all the way back to 2013. And every single year, just fucking sell in May and go away. So, what are the odds we carry on selling off this month? Very, very high. Very, very high odds that we continue selling. And yesterday we had a bounce, traded that, great little trade there. And now we're coming down again. We'll have to see what happens. But as I said, most people are not going to like what I'm saying. And that's all part of it. That's part of it. If they did like what I was saying, I'd be doing something wrong, because if the majority were agreeing with me and saying, oh, I get that, and I was blowing up, then I'd be questioning, hang on a minute, something's wrong here, and I'm verifying everybody's opinion, I'm relating to everyone. I need to switch this up, because if I was doing that, then I'd be wrong. So, yeah, as I said, making money is very counterintuitive. And you're just separating yourself from the herd, from the sheep. That is a task in itself, because most people want to be part of the herd. Safety, security, you know, comfort, it's easy, and you're getting everything gratified and verified by everyone else. It's fun, but it's not where the money is. So, and I want to show you guys soon exactly how I trade. And no influencer, no guru is going to show you their trades, because they're not fucking trading. I told you 1,000 times, they're just selling. They're selling courses, keeping you subscribed. They're making content. They're getting sponsored. They're making money from referral fees. Don't do all that bullshit. You don't time to trade. So as I say, sometimes I'll be quiet because I'm busy trading. It does test you mentally. Primary objective you need is to understand the fundamental principles, the macro elements, and how to build a mindset. It is everything. Niche indicators and little fucking trade analysis options. It's way down the list, and it's not priority. Technical analysis such as support and resistance, areas of interest, RSI, that's super important. And as I say, building the mindset, going to the gym, keeping fit, that mental clarity, having goals, understanding why you're doing this. If you haven't got that, then you're fucking screwed, because you're going to get steamrolled by the guys who have got that. Give us a follow if any of this stuff helps. I know I rant on, but honestly, it's all good information. I would have killed to get information like this when I was starting out. Cheers, guys.